when we think of Bitcoin, we also think of it in a developed market perspective. We think of it as a United States person. We think of it as a European, for example. And people are like, why do you need Bitcoin? What is Bitcoin useful for? Whereas when you go to Argentina or Nigeria or dozens of other countries in the world, it's far more obvious why people need Bitcoin and why they might be interested in it, and why they might be interested in things like stable coins or things like ways to get US dollars, basically various types of harder money than whatever their local money is.
In this highlight, Lyn Alden reveals why many countries will see a much faster rate of Bitcoin adoption than in the US. Alden claims that even though inflation in the US has been bad, it's only been under 10%. This is not nearly as devastating as it's been in places like Argentina, where the inflation rate has been over 3,000%. As a result, Alden believes that Bitcoin has far more utility in places like Argentina that have unstable currencies, and consequently will see a quicker adoption of Bitcoin than in places with stable currencies like the US. Alden comes to the conclusion that Bitcoin is still in its early stages of adoption and will grow exponentially in the coming years as the world learns about its utility. Now, let's hear what Lyn Alden has to say.
When the dollar gets super strong like it is now, the Fed is increasing interest rates, they're doing quantitative tightening, and they're trying to rein in inflation. And the problem is that there are so many countries in the world that buy commodities in dollars. Right, so they're having a much harder time buying commodities, and then a lot of them have dollar financing. They have dollar-denominated debts from European lenders, from American lenders, from Japanese lenders, from Chinese lenders. These just dozens and dozens of countries in the world get squeezed when we do this. And imagine you're a country, and basically another country can dictate your monetary policy for you. That's kind of the world we live in. And what Bitcoin comes around and does and says, here's an alternative. It's new, it's volatile, it's poorly understood, but it doesn't change its monetary policy based on the decision of a handful of people. Most people here have heard of Bitcoin Beach, right? So that, what was it, 2019 when they started? And they build this bottom-up community in El Salvador, and it's a small, circular Bitcoin economy where a large percentage of the population is educated on it, they understand it, the Bitcoins are locally held. And there's been a lot of focus on nation-state adoption, and I think that's healthy. I mean, it's obviously a big sign of ongoing structural adoption when nation-states adopt Bitcoin. But of course, you can't impose education from top down. You can't impose buy-in from top down. And when we look at politics in general, grassroots movements are always more powerful than like who has the most money for financing, for example. If the candidate's not right, it doesn't matter how much money you throw at it. And it's kind of the similar thing. If people don't understand Bitcoin, it doesn't matter if the government mandates it or not, or mandates its legal tender. And so I think nation states can do a lot by making it, not a taxable currency, but I think that actual adoption has to come up from these much smaller communities. And one thing we've been seeing over the past year or two, especially the past year, is that they've kind of replicated the Bitcoin Beach model, where you have Bitcoin Lake, you have Bitcoin Island, you have Bitcoin Jungle, right? There's little communities popping up in Costa Rica, Guatemala, Vietnam, Isle of Man. There's basically all these different little communities popping up, and I think that's only going to accelerate. But I think the lower capital cost kind of early thing is to make the local community, educate them about Bitcoin, help them, reach out to them, ask what they need. And then there are these companies like wallet companies and things like that that can go out and build these little local communities and work with them. It's obviously a very volatile process, and it's hard to understand, but it's in an uptrend. There's there's nearly 200 currencies in the world. And how many currencies are useful medium of exchange outside of their host country? Like Egypt, for example, is a country of 100 million people. If I take some Egyptian pounds and I'm in New Jersey, what do I do with those Egyptian pounds? I don't even know if a bank would take them and convert them. Most banks wouldn't. It'd be very hard to actually find a way to use that to purchase anything or transfer anything outside of Egypt or outside of maybe a couple countries around Egypt. Whereas there are some currencies like, if you go to most countries in the world and you have dollars, you could find someone to take them off your hands pretty easily. It's not that hard of a process. Over time, Bitcoin is becoming a top 5 or probably top 5, definitely top 10 globally saleable money, which means that if you have Bitcoin, especially in urban centers of the world, reasonably tech-savvy areas, you can find someone to take Bitcoin off your hands a lot easier than you can for many other fiat currencies of the world. We're kind of seeing the same thing when it comes down to these individual communities that are building up, right? I think those are more powerful than top-down attempted implementations. I think the more people in a community that understand Bitcoin, get educated on it, and then they see it firsthand. I mean, basically, it's like you need a critical mass of merchants accepting it, people wanting to use it, people saving in it, and then you get that circular community, and you go to an underbanked area especially, and they get the benefit right away. And I think it's powerful. So Bitcoin currently settles trillions of dollars worth of value annually, and it's a huge network. And the interesting thing about it is that if you compare it to FedWire, which is the biggest settlement infrastructure we have in the United States, it's basically the Federal Reserve's interbank settlement system. Bitcoin and FedWire process approximately the same number of transactions per year. And you can kind of think of Bitcoin as the global open source version of that. And then unlike FedWire, it has its own gold attached to it, right? So FedWire is just settling fiat currencies that are then running on top of the Federal Reserve, whereas Bitcoin is basically a FedWire settlement network with also its own digital gold attached to it. It's a scarce unit that is also doing that type of thing. What I love about kind of the Bitcoin development in general is how security focused it is, right? So if you look at other ecosystems, quote unquote digital assets or crypto, it's kind of like move fast, break things, see what works, and worry about security later. Whereas Bitcoin, it's like everything is slow, deliberate, and security focused. And so, I think security is in a good place, and I think it's really about ongoing improvements. I think Lightning still needs more hardening, more security robustness. I think that comes with time and size. And I'm also interested in seeing just, they're doing improvements in making nodes have, better bandwidth, lower bandwidth requirements to run. A lot of it, people say that Bitcoin's not innovating. It's mainly innovating to make what it already does well better. So I think obviously in the near term, it's rough. I mean, Bitcoin price is down. We're here at a conference and we're in a deep bear market. But I think in the long term, it almost couldn't happen any other way. That this kind of malinvestment, this kind of leverage casino stuff has to blow up. If you have malinvestment, it has to die eventually. And things that are just heavily built on speculation die eventually. It's one thing to gamble and know that you're gambling. The risk comes when people don't realize that they're gambling and they're gambling. And so I view most of the kind of like FTX and similar things as almost like an extension of fiat. It's like late stage fiat. They took a lot of fiat ideas and kind of brought that into the quote unquote digital assets realm. And I think that the actual innovation is Bitcoin. The actual innovation is true decentralization, hard money, censorship resistant transactions. That's the innovation. And like 99% or more of what we're seeing out there. I mean, there's interesting experiments, but anything that involves tokens and seigniorage and speculations and leverage is just like it's a scammy fiat kind of industry built on top of it. And it kind of has to blow up. Now, there could have been a different timeline where there was more sideload leverage. It didn't have to be this interconnected, but it is natural for these things to develop like this. But because it turned out to be so interconnected, it kind of all had to fall at once, unfortunately. Bitcoin is very different from everything else in the space. Its nature is not inherently speculative in the same way that other things are, right? So you can speculate with Bitcoin. Many people do speculate with Bitcoin because it's a volatile new asset. People are going to speculate with it. But the underlying use case, why it was designed, and the way that many of us use it is not speculative. I think a lot of the other part of the space is really going to be delegated to the realm of casino land. It's things you're speculating on, and I think we've kind of seen potentially, and this famous last words, I guess, but it's like we've seen, I think, the high watermark in terms of how much speculation that can happen at once in this industry. I would tie it into the prior macro thing. We've had 40 years of lower and lower interest rates. And towards the end of that cycle, we hit zero interest rates, and we gave everybody free money. And we had this huge, 40% increase in the broad money supply in 2 years. And then you have this rise of all the scams. It's really hard to mimic all those conditions happening again. The sheer size of this latest crypto bubble is really hard to replicate. And I think it opened a lot of eyes to the dangers of most of the space. I think a lot of people, especially when they talk about Bitcoin, they don't think of it in an international context. They think of it as American or a European, and they think, why do I need Bitcoin? I have credit cards, I have PayPal. I mean, Bitcoin volatile, why do I need that? Whereas it's a much easier sell in places like Argentina or Nigeria or Turkey or any other, multiple other countries where you either have just structurally high inflation, just structurally weak currencies. Many of them have hyperinflation in their memories, in their generation, or you have more rampant authoritarianism where you have more arbitrary bank freezes, more arbitrary control. And so I think when people think about Bitcoin, one thing they completely misunderstand or underappreciate is that they have to think about it in a global context.
I strongly recommend you click this video next, where Lyn Alden breaks down the seemingly unrelated factors that are all simultaneously contributing to the worst bond market crisis since World War II.